Welcome back, everybody, to another deep dive. Today, we'll be taking a closer look at the Indian economic landscape.
Sounds good.
All right, so we've got this fantastic Edelweiss Weekly newsletter from January 31st, 2025. It's packed with insights. It's like a cheat sheet for anyone who wants to understand what's really going on in India.
It really is a treasure trove of information.
So think of this newsletter as your all-access pass, to the inner workings of the Indian economy, from the big picture macro trends to the nitty-gritty market updates.
I like that all-access pass.
We're going to unpack it all, break it down into bite-sized pieces, and highlight what matters most to you guys, the listener.
Yes. Let's make it digestible.
Exactly. And you know what? There are some seriously surprising trends emerging here.
Oh, yeah, for sure.
I mean, did you know over half of India's workforce is now self-employed?
It's a remarkable shift in the employment landscape.
Yeah, and then there's a central bank stepping in to manage liquidity in a big way.
They're definitely not sitting on the sidelines.
It's a wild ride, so buckle up.
All right, let's dive in.
So let's start with the macro picture, the big picture stuff. The Economic Survey 2024-25, it projects India's GDP to grow between 6.3% to 6.8% in fiscal year 2026.
That's a healthy growth projection considering the global economic headwinds.
Yeah, 6.3% to 6.8%, that sounds pretty promising on the surface. But, the real question is, does that kind of growth really trickle down and impact the everyday lives of people in India? What do you think?
Well, if achieved and sustained, this level of growth can indeed translate into some pretty tangible benefits for the average person in India. You're talking job creation, increased incomes, improved living standards.
That's what we want to hear.
However, there are challenges to consider. The fiscal deficit, for instance, is currently at 56.7% of the budget estimates for April-December of fiscal year 25.
That sounds like a bit of a red flag, 56.7%. What does that actually mean for, government spending, on things like infrastructure or social programs?
Well, it's a delicate balancing act.
Mm-hmm.
A high fiscal deficit like this could lead to reduced government spending in key areas, or even an increase in taxes. It's something to keep a close eye on, because it could impact the government's ability to invest in crucial sectors and support long-term economic growth.
Okay. Yeah, that makes sense. So we've got growth projected, but the government's finances are, a bit stretched. What else is the newsletter highlighting in the macro landscape?
Well, there's some positive movement in the 8 core industries. These are like the foundation of the Indian economy. You're talking coal, steel, electricity. They grew by 4% year on year in December of 2024.
4% growth. Not bad, but I'm guessing it's not all smooth sailing.
Right. You're picking up what we're putting down. Growth has slowed down a bit compared to the previous year, and it's worth noting that all sectors grew except for natural gas.
Interesting. So which sector is leading the pack?
Actually, coal production is leading the charge, which is intriguing considering India's push towards renewable energy.
Yeah, it seems like a bit of a contradiction, doesn't it? There's a lot going on with the whole energy transition thing.
Definitely a lot of moving pieces.
All right, let's get back to that stat about self-employment. Over half of India's workforce is now self-employed. What's driving this massive shift?
It's a confluence of factors, really.
Yeah.
You've got a booming startup ecosystem fueled by a new generation of young entrepreneurs. You've got greater access to digital tools and platforms, and you might even be seeing a cultural shift towards entrepreneurship.
It's fascinating how technology is reshaping the employment landscape, not just in developed economies, but also in emerging markets like India. And speaking of technology, the newsletter also mentions a surge in digital payments.
Absolutely. Digital payments are booming in India.
Are these two trends connected?
Oh, they're definitely intertwined.
Yeah.
The rise in digital payments is closely tied to government initiatives promoting cashless transactions. Plus, smartphones and internet access are becoming more affordable. This digital infrastructure, it's a game changer for entrepreneurs and freelancers operating in the self-employment sector.
It's like a positive feedback loop. The more people embrace digital payments, the more opportunities open up for those in the self-employment sector.
It's a symbiotic relationship.
Okay, so we've unpacked some of the macro trends. Now let's shift gears and dive into the domestic equity market. What's the mood like in the stock market this week? What are the investors feeling?
Well, the Sensex and Nifty 50, India's key stock market indices, they're both up this week.
So things are looking up.
But there's a twist. The small cap segment is actually down. It's a bit of a mixed bag.
A mixed bag, huh? So some investors are winning, others are feeling the pinch. What's driving these market movements? Is it all connected to the macro trends we just talked about?
It's a combination of factors. Those RBI liquidity measures, the ones where the central bank is injecting cash into the banking system, they're having a positive impact on investor sentiment.
And then you've got Strong earnings from U.S. tech companies, which are having a spillover effect globally. And of course, those optimistic growth projections from the economic survey, they're adding to the cheer. Okay, so there's some good news in the mix. But I bet it's not all sunshine and roses, right? There have to be some countervailing forces at play.
You're reading my mind. Domestic corporate earnings haven't been spectacular, and we're also seeing foreign institutional investors pulling some money out of the market. It's a push and pull between these positive and negative factors.
A bit of a tug of war. What about specific sectors? Are there any clear winners and losers emerging from all this market trauma?
Well, realty, auto, and Bankex sectors that are really sensitive to interest rates, they're seeing some significant gains. This makes sense given the RBI's liquidity injection. Easier credit can boost investment in real estate, and it can also boost auto sales.
Okay, so those sectors are riding the wave of easy money. Now let's move on to something a bit more complex, but just as important. The domestic debt market. Now I know bond yields can be a bit of a head-scratcher for some people, but why should we care about them? What do they tell us about the economy?
Bond yields essentially tell us how much return investors are demanding for lending money to the government. And lately, they've been trending downwards.
So is that a good thing or a bad thing?
It can be interpreted as a sign of increasing confidence in the Indian economy. Lower bond yields generally mean that investors perceive less risk and are willing to accept lower returns. This downward trend, it's likely connected to those RBI liquidity measures we've been discussing.
Uh-huh. So the RBI's actions are having ripple effects across multiple segments of the financial market. It seems like they're pulling a lot of levers to keep things stable. But before we get too deep into the weeds here, let's take a step back and look at some of the key indicators that paint a broader picture of the Indian economy's health. What are some of the highlights from the newsletter's charts and tables?
A few things stand out. Firstly, the trade deficit. It's narrowed to $21.94 billion in December 2024. This is a positive sign. It means the gap between imports and exports is shrinking.
That sounds like good news for the Indian rupee, right?
Exactly. A smaller trade deficit generally puts less pressure on the currency. We're also seeing some positive trends in credit and deposit growth. This indicates increased economic activity and confidence.
More money flowing, more people borrowing and saving. That's generally a good sign. But I'm sure it's not all rosy. What about inflation? That's been a major concern globally.
You're right, but there's some good news on that front. The Wholesale Price Index, or WPI, has been declining in recent months. This suggests that inflationary pressures are starting to ease. This gives the RBI more breathing room to focus on supporting economic growth.
So inflation is cooling down. That's good news. But what about industrial output? Is that Make in India initiative actually gaining traction?
The Index of Industrial Production, or IIP, it's been a bit volatile. There are some signs of recovery, but it's not a consistent upward trend just yet.
Okay, so some positive signals, some areas of concern. It seems like the Indian economy is a bit of a puzzle with both promising and challenging pieces. But before we wrap up this part of our deep dive, I want to circle back to that intriguing trend of rising self-employment. What are the underlying factors fueling this phenomenon? It can't just be about the hustle culture narrative going global, can it?
It's definitely more nuanced than that. The internet and digital platforms have truly democratized entrepreneurship. It's easier than ever to launch a business, connect with customers, manage operations online. This is attracting young people who are seeking more flexibility and autonomy in their work lives.
It's interesting that you mentioned flexibility and autonomy because those are values that are often associated with developed economies. Are we seeing a convergence of work cultures globally?
I think we are. The rise of the gig economy, remote work, freelancing, these are trends we're seeing across the globe. It's a new world of work.
But self-employment isn't without its risks. What are some of the challenges people might face when they choose this path?
You're absolutely right. Unlike traditional employment, self-employment comes with no guarantees. There's no steady paycheck, no benefits, no safety net. Those who choose this path need to be prepared to manage their income, navigate uncertainty, and constantly hustle to stay ahead.
So it requires a completely different mindset and skill set.
Exactly. It's not for the faint of heart.
Well, on that note, let's take a quick pause. When we return, we'll zoom out and explore how global trends are shaping India's economic trajectory. Okay, so we're back. And we're ready to dig even deeper into this Edelweiss newsletter. Now, I'm no bond trader, but I did notice this chart tracking the 10-year benchmark government security, or GSEC as they call it. It's been quite a roller coaster this past year. What can you tell us about it?
Well, this particular chart, it's a good indicator of investor sentiment. You see, when those yields climb, it signals that investors are demanding higher returns for lending money to the government.
Because they think it's riskier, right?
Exactly. They perceive increased risk.
Yeah.
But when those yields dip down...
Like we're seeing in some recent period.
Yeah, exactly. That suggests a boost in confidence. Maybe due to some of the factors we were talking about earlier, like those RBI liquidity measures.
Makes sense. So those dips are a good thing. Okay, another chart that caught my eye compares foreign institutional investor, or FII flows, with domestic institutional investor DII flows. And they've set that against the Nifty 50 index. What's the story that this chart is telling us?
This one's interesting. It really highlights the interplay of domestic and foreign investment. So over the past year, we've seen FIIs being net sellers, meaning they've pulled more money out of the market than they've put in.
But the DIIs have been picking up the slack.
Right. They've become net buyers stepping in to fill that gap.
So they're more optimistic.
It could indicate that, yeah, that domestic investors are feeling more confident about India's long-term prospects, even as some foreign investors are, maybe a little bit more cautious. It's a trend worth watching.
For sure. Now let's move on to some other vital signs for the economy. The Wholesale Price Index, or WPI, and the Index of Industrial Production, the IIP. I mean, these are pretty important, aren't they?
They are. They can tell us a lot about the health of the Indian economy.
Yeah.
The WPI measures inflation at the wholesale level, so it gives us an idea of how prices are changing for businesses. And the IIP that tracks the performance of the industrial sector. So is manufacturing growing or shrinking? These charts give us some clues.
And what clues are we getting?
Well, if you look at the WPI chart, you see a clear downward trend over the past year. So those inflationary pressures that were a major concern earlier, they seem to be easing.
Okay, that's got to be a relief for the RBI, right? I mean, does this impact their monetary policy decisions in any way?
It certainly gives them more flexibility. With inflation cooling down, the RBI has more room to maneuver in terms of supporting economic growth. They don't have to worry so much about raising interest rates to combat inflation.
Got it. So the IIP chart, what's that telling us?
The IIP chart tells a slightly different story. You see those peaks and valleys there. That points to some volatility. The industrial sector hasn't fully recovered yet. It could be due to global headwinds, maybe some supply chain disruptions, and perhaps some lingering effects of the pandemic.
But there was a noticeable uptick towards the end of 2024, right? I mean, does this mean Make in India is actually starting to gain some real momentum?
It's certainly a positive sign. We need to see this growth sustained over a longer period, to be sure. But it does suggest that the industrial sector might be turning a corner.
Fingers crossed. All right, one last chart I want to touch upon before we move on. It compares credit growth with deposit growth. What insights can we glean from this about the banking sector and the overall economy?
This chart highlights an important trend. We see that credit growth has been outpacing deposit growth this past year.
So more money is being lent out than is being deposited. What does that tell us about economic activity?
It suggests that businesses and individuals are borrowing more to invest and spend, which can fuel economic growth. But, and this is a big but, it's crucial to monitor the quality of those loans and the bank's ability to manage risk.
We don't want a repeat of those past crises with bad loans and all that.
Exactly. Prudent lending practices are essential for sustained economic growth. We need to make sure that the money being lent out is actually going to productive uses.
Makes sense. We've really dissected these charts and tables from the Edelweiss newsletter. What's the big picture emerging from all this data? What's the takeaway for our listeners?
It shows us that the Indian economy is at a bit of a crossroads. It's facing both opportunities and challenges. We're seeing some positive signs, like healthy GDP growth projections, easing inflationary pressures, and increasing domestic investment. Plus, the government and the RBI, they're actively supporting growth and managing liquidity, which is encouraging.
Right, but it's not all smooth sailing, is it?
Not exactly. We also have to consider those headwinds, like the fiscal deficit, that volatility in industrial output, and some caution from those foreign investors.
So a mixed bag. It seems like India has to walk a tightrope, leveraging its strengths while navigating those global headwinds.
Absolutely. It's a delicate balancing act. And that brings us back to this whole rise of self-employment. It's not just a fad. It's a response to a changing world, a world where traditional employment models are being disrupted.
So what are the deeper forces driving this trend, beyond the whole hustle culture thing?
Well, the internet and digital platforms have really leveled the playing field. They've given individuals access to tools and resources that were previously only available to large corporations. So now, anyone with a good idea and an internet connection can potentially launch a business.
But running a business takes more than just a good idea and an internet connection, right?
Oh, absolutely. It requires a different set of skills and a different mindset.
Yeah.
You have to be comfortable with risk. You need to be able to adapt to change. And you have to be good at managing your time and your money.
So it's not just about being your own boss. It's about being a jack of all trades.
In a way, yes. You're the CEO, the marketer, the accountant, all rolled into one.
That's a lot to handle. But
Yeah.
there are rewards too, right? Like flexibility and autonomy.
Of course, those are huge draws for many people who choose the path of self-employment. They want to be in control of their own destiny. They want to set their own hours. And they want to work on projects that they're passionate about.
But it's not without its downsides. We talked about the lack of a steady paycheck, the lack of benefits, and the constant hustle. It's not for everyone.
Right? It's not a magic bullet, but it's an option. And for
Okay.
many people in India, it's becoming an increasingly attractive option.
It's interesting that you mentioned flexibility and autonomy because those are values that we often associate with developed economies. Are we seeing a convergence of work cultures happening globally?
I think so. The rise of the gig economy, remote work freelancing, these trends aren't limited to any one country or region. They're happening everywhere. And they're changing the way we think about work.
It's a brave new world. But self-employment isn't without its challenges. We talked about the lack of a steady paycheck, the lack of benefits, the need to constantly hustle. It's not for the faint of heart.
You're right. It's not a magic bullet, but it's an option. And for many people in India, it's becoming an increasingly attractive option.
It's like that old saying, freedom isn't free. You have to work for it. Okay, so we've explored the domestic side of things. Now let's shift our focus outward. When we come back, we'll connect the dots between India's economic story and the global landscape. And we're back for the final stretch of our Indian economic deep dive. We've covered a lot of ground, folks, from those macro trends to the market data and even the whole self-employment thing. But now we're going to zoom out, take a wider view and see how India's story fits into the global puzzle. Because let's face it, no economy is an island, right?
Exactly. India's economic fate is intertwined with global trends. It's all connected. The opportunities, the risks, they're all part of a bigger picture.
So let's untangle those global forces that are impacting India. The newsletter starts with the performance of international indices like the MSCI Emerging Market Index, which, as you know, tracks a basket of emerging market stocks. So what does this index tell us about global investor sentiment, towards emerging economies like India?
Well, the MSCI Emerging Market Index has been on an upward trajectory lately, which suggests that investors are feeling pretty bullish on emerging markets, including India. They're seeing potential for growth.
Okay, so that's a positive sign. But does a positive global outlook automatically translate to benefits for India? Or are there other things to consider?
It's not a simple equation. While a strong global economy can create some favorable conditions for emerging markets, it's not a guaranteed win. India still needs to address its own domestic challenges, and it needs to position itself strategically to attract that foreign investment.
So it's not just about riding the wave, it's about being proactive about steering the ship in the right direction. All right, what else? The newsletter also mentions that the U.S. Fed funds target rate remained unchanged. Now, I know the Fed's decisions can send shockwaves through the global economy, so how does this particular decision impact India?
Well, the Fed holding rates steady, for now, it suggests a cautious approach to managing inflation in the U.S. And this can actually be beneficial for emerging markets like India. It provides some stability and reduces the risk of those sudden capital outflows that can happen when the Fed raises rates. Investors pulling their money out of emerging markets and parking it in safer assets.
So a steady Fed is good news for India in the short term, at least for now. But what about the long game?
The key takeaway here is that India can't afford to be complacent. The Fed's stance could change depending on how the U.S. economy performs, and India needs to be prepared for any potential volatility in those global interest rates.
Agility and resilience. Those are the key words.
Got it. All right, let's move on to the grand finale. Commodity prices. The newsletter gives us an update on crude oil, gold, and silver. Let's break it down. What are we seeing?
Starting with crude oil, prices have eased slightly. This is particularly good news for India. As you know, a major oil importer. Lower oil prices can help control inflation, and they can reduce that trade deficit we talked about earlier. Ultimately, that benefits consumers and businesses alike. Less pain at the pump, always a good thing. But gold and silver, they seem to be bucking the trend.
Right. Gold and silver prices have been trending upwards, which might reflect what we call safe haven demand. When there's uncertainty in the global markets, investors often turn to precious metals as a store of value. It's like a flight to safety.
So even though some economies are showing signs of recovery, there's still a sense of unease in the air, enough to push investors towards those traditional safe havens. Interesting. It really highlights how interconnected the global financial system is. Events happening thousands of miles away can still have a ripple effect on investor behavior and market trends.
That's the reality of globalization. We're all in this together, for better or worse.
So we've come full circle. We started with India's domestic economic landscape, and now we've zoomed out to see how it's connected to the global scene. What does this all mean for someone who's trying to make sense of it all? What are the key takeaways from this deep dive?
I think the main takeaway is that the Indian economy is in a dynamic phase. It's full of potential, but it's also facing some real challenges. Domestic factors like the fiscal deficit and that volatile industrial output, those need careful monitoring. And then there are those global trends, like commodity prices and the actions of central banks like the Fed. Those will continue to influence India's trajectory.
It's like a complex dance. India has to find the right rhythm and balance between its domestic priorities and those global forces.
Exactly. And that brings us to our final thought. Given all the trends we've discussed, the rise of self-employment, the digitalization of the economy, the interconnectedness of global markets, what skills and resources do individuals need to not just survive but thrive in this evolving landscape?
That's a great question. It's something for all of us to ponder as we navigate our own journeys in this complex world. So there you have it, folks. We've taken a deep dive into the Indian economy, explored the data, analyzed the charts, and hopefully sparked some insightful conversations along the way. Remember, knowledge is power. And with the insights you've gained from this deep dive, you're better equipped to make informed decisions and navigate the complexities of this fascinating and ever-evolving market. Thanks for joining us.